and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. The Cryptocurrency News End channel does not recommend any offers to buy, sell, invest, etc. in the cryptocurrency market in any way, and any losses and other consequences are your responsibility. Our channel only follows the news of the cryptocurrency market and does not provide you with any advice on making transactions. Please enter into transactions in the market with your own analysis. Bitcoin faces critical test at $85,000. Will a market meltdown follow? Bitcoin crash warning. Traders fear $74,000 bottom as Trump's EU tariff threat wreaks havoc. Bitcoin price collapses to $82,400. Is a catastrophic crash next? Crypto fear index plunges to crisis levels. Is a Bitcoin collapse imminent? FBI urges crypto exchanges to block transactions as Bybit hackers move stolen $1.4 billion. Bitcoin faces critical test at $80,000. Will a market meltdown follow? The cryptocurrency market is on edge as Bitcoin struggles to hold above the crucial $85,000 level. A breakdown could trigger a cascading wave of liquidations, sending shockwaves across the entire crypto ecosystem. With over $1 billion in leverage long positions at risk, traders are anxiously watching whether bulls can stage a strong defense or if the bears will push BTC into a deeper correction. Bitcoin, BTC price analysis. Ticking time bomb at $85,000? Bitcoin, BTC price has dipped into the $80,000 zone, signaling potential trouble ahead. The sharp drop below $90,000 on February 25th resulted in nearly $938 million in outflows from U.S. spot Bitcoin ETFs, reinforcing the growing fear that the recent uptrend may be faltering. Despite the bearish pressure, some analysts believe this could be a short-term pullback rather than a full-blown reversal. Binance CEO Richard Ting referred to the decline as a tactical retreat, rather than a sign of complete breakdown. However, if Bitcoin loses its footing at $85,000, the next major support at $73,777 could come into play, possibly leading to a plunge towards $70,412, the target of a bearish double-top pattern. Ethereum ETH price analysis, holding the line at $2,300. Ethereum ETH is also facing downward pressure after failing to break the $2,850 resistance level. The recent drop below $2,520 has intensified selling, pulling ETH toward a critical support at $2,300. If this level cracks, bears could drive the price down to $2,111. On the flip side, a recovery above $2,520 would suggest that bulls are regaining strength. However, strong resistance at the 20-day EMA, $2,700, must be overcome for ETH to regain bullish momentum. XRP price analysis, struggling to hold above $2.20. XRP price dropped below the support line of its symmetrical triangle pattern, indicating that bears have the upper hand. While bulls attempted to reclaim lost ground, resistance at $2.54 has been keeping the token in check. A further breakdown could see XRP sliding to $1.80, while a bounce above $2.54 might signal a return to stability. Binance Coin, BNB price analysis. Bulls in trouble? BNB recently lost the $635 support, reintroducing the risk of a decline toward $557. The current attempt at recovery could face rejection at the 20-day EMA $644, leading to further downside. If bulls manage to push above $660, however, BNB may see a rally towards $686. Solana, SOL, price analysis. Will the bulls step in? Solana, SOL, has been in a strong downtrend, with the price attempting to stabilize at $133. The RSI in oversold territory suggests a short-term recovery could be on the horizon, potentially reaching $150 or $156. However, a break below $133 could send SOL tumbling toward deeper support levels. Dogecoin, Doge price analysis. Breaking down further, Dogecoin, Doge, slipped below the descending channel pattern, signaling increased bearish dominance. A failure to reclaim higher levels could result in a continued drop toward 15 cents. Bulls will need to reclaim the 25 cents level to shift momentum back in their favor. Cardano, ADA price analysis, battling to stay above 66 cents. Cardano, ADA, saw a bounce from its descending channel support at 66 cents, but selling pressure at the 20-day EMA 76 cents remains a major obstacle. A break below 66 cents could drive ADA toward 50 cents, while a push above 76 cents may indicate a recovery attempt. Chainlink, Link price analysis, bears tighten grip. Chainlink, Link, dropped below a key support level, with bears eyeing further downside toward $12.71 and potentially $10. A move above $20.78, however, could suggest renewed strength and an extension of the current range-bound trading pattern. SWAY, SUI price analysis, holding critical support. SWAY, SUI, briefly dipped below $2.86 but saw buying interest at lower levels. If the 20-day EMA, $3.28, acts as resistance, the probability of another drop below $2.86 increases. Conversely, breaking above $3.28 could propel SUI to $3.74. Avalanche, AVAX, price analysis, bulls fighting for survival. Avalanche, AVAX, lost the $22.35 support, but bulls are attempting a recovery. If AVAX fails to reclaim $25.13, further downside towards $17.50 remains a possibility. However, a break above $25.13 could spark a rally toward $27.50. Will the crypto market avoid a major collapse, or is the worst yet to come? Bitcoin crash warning. Traders fear $74,000 bottom as Trump's EU tariff threat wreaks havoc. The cryptocurrency market is in turmoil as Bitcoin continues its relentless sell-off, plunging to levels unseen since November 2024. Liquidations are mounting, spot Bitcoin ETFs are witnessing massive outflows, and new geopolitical risks, including former U.S. President Donald Trump's aggressive tariff threats against the European Union, are sending shockwaves through global markets. Bitcoin hits 3-month low. More bloodshed ahead? Bitcoin's downward spiral has entered its third consecutive day, with prices briefly touching $82,256 before buyers stepped in. However, analysts warn that the worst may not be over. Data from multiple sources indicates that Bitcoin could still nosedive into the dreaded $70,000 zone, shaking investor confidence to its core. Independent market analyst Scott Melker attempted to reassure investors, noting a potential bullish divergence on the Relative Strength Index, RSI. However, his cautionary tone was evident. Bullish divergence with oversold RSI still very much in play. At the moment, RSI still is making a higher low. We need to see a clear elbow up on the next candle to confirm. Nothing here yet. Extreme fear grips crypto markets. As Bitcoin hovers dangerously near support levels, the crypto fear and greed index has plunged to 21, a zone categorically labeled as extreme fear. The last time the index fell to such lows was during the 2022 bear market, sparking concerns that another brutal downturn is imminent. Velo Analytics reports that Bitcoin has suffered its worst three-day performance since 2022, fueled by a combination of aggressive liquidations and nearly $1 billion in spot ETF outflows. The mass exodus of institutional money is sending a grim message. Smart money might be exiting before an even bigger crash unfolds. Trump's tariff threat triggers panic selling. While Bitcoin's sell-off began before Trump's latest political maneuvers, markets took a deeper dive after the former president threatened to impose 25% tariffs on the European Union. The news triggered a sharp decline across U.S. equities, with the S&P 500 also posting significant losses. Adding to the uncertainty, the Trump administration issued a memo to federal agencies, outlining mass layoffs and potential cost-cutting measures. This move has fueled speculation that the global economy could face a severe downturn if Trump follows through on his aggressive policies. A generational buying opportunity or a sign of worse to come? Despite the brutal Bitcoin crash, some analysts believe that these conditions might present a once-in-a-lifetime buying opportunity. However, others are hesitant to call the bottom, with estimates ranging between $80,000 and $71,000 as the next major support zone. With panic gripping the market and uncertainty looming over global economic policies, could Bitcoin's free-fall spiral even further below $70,000? Bitcoin price collapses to $82,400. Is a catastrophic crash next? Bitcoin's sharp decline has sent shockwaves through the market, raising urgent questions about its stability. Economic turmoil, Nvidia's earnings, and a massive BTC options expiry are fueling fears of further drops. Is the worst yet to come? Bitcoin plunges below $84,000 as panic grips investors. Bitcoin, BTC, crashed to a devastating low of $83,500 on February 26, marking its weakest level since November 2024. This staggering $12,820 drop within 3 days wiped out over $1 billion in leveraged long positions, according to CoinGlass data. The downward spiral has rattled traders, many of whom now fear an extended bear market. The broader financial landscape is far from reassuring. Analysts point to growing fears of a global economic recession, with rising inflation and geopolitical tensions pushing investors towards safer assets. Even the long-reliable gold market failed to offer sanctuary, plunging 2.2% in just 2 days, falling from its all-time high of $2,956 on February 24. Trump's economic bombshell worsens market conditions. Adding to the chaos, former U.S. President Donald Trump recently advocated for a drastic increase in tariffs on imports from Canada and Mexico. This policy shift has shaken global markets, driving capital into U.S. Treasuries as investors scramble for safety. With recession fears intensifying, Bitcoin's inability to provide dividends or cash flow leaves it vulnerable to further sell-offs. Unlike big tech stocks, which benefit from mergers and acquisitions during downturns, Bitcoin lacks a fundamental mechanism to withstand economic slumps. Meanwhile, FactSet analyst John Butters projects a robust 16.9% year-over-year earnings growth for major U.S. corporations, raising doubts about Bitcoin's ability to remain competitive against traditional assets. MicroStrategy's collapse threatens Bitcoin's price stability. Critics warn that MicroStrategy's aggressive Bitcoin accumulation has artificially inflated BTC's price to $100,000. However, with no clear path to sustained funding, concerns are growing over the firm's ability to maintain its $42 billion capital expansion plan over the next 3 years. The company's stock has plunged 19.4% in a single week, highlighting investor skepticism and casting doubt on Bitcoin's long-term resilience. AI frenzy fizzles. Will Nvidia's earnings trigger another crypto meltdown? Traders are now bracing for the impact of Nvidia's quarterly earnings report on February 26th. The AI giant's performance could dictate the next big move in risk assets, including Bitcoin. Rising fears of an AI stock market bubble and escalating U.S.-China trade tensions are sending 5-year U.S. Treasury yields to their lowest levels since December 2024. Such a scenario spells bad news for Bitcoin, as investors are shifting toward low-risk assets. Spot Bitcoin ETFs, once seen as a game-changer for institutional adoption, are now witnessing a staggering $1.1 billion outflow in just a single day, February 24th, according to Farsight investors. This mass exodus of funds is reinforcing bearish sentiment and eroding confidence in Bitcoin as a hedge against financial instability. Bitcoin options expiry could unleash another crash. Adding fuel to the fire, Bitcoin's $6.9 billion monthly options expiry on February 28th is pressuring the market even further. Traders are increasingly betting on a lower BTC price, with put-sell options outweighing call-buy options by $530 million. Bears now have a clear incentive to keep Bitcoin below $88,000 before the 8 a.m. Universal Time Coordinated expiry, making it incredibly difficult for bulls to regain momentum. Out of the massive $3.7 billion in call options, only a minuscule $60 million are positioned at $88,000 or below, leaving little room for a swift recovery. Can Bitcoin recover, or is a free fall to $70,000 inevitable? With institutional confidence waning, economic uncertainty mounting, and bearish pressure from options markets, Bitcoin's path to $95,000 appears increasingly unlikely. Could BTC plummet even further, potentially testing the $74,000 or even $70,000 support levels in the coming weeks? What's next for crypto investors in these turbulent times? Crypto fear index plunges to crisis levels. Is a Bitcoin collapse imminent? The Crypto Fear and Greed Index, a key sentiment tracker in the cryptocurrency market, has plunged to its lowest level in over 2 years. This alarming drop comes as Bitcoin tumbles below $85,000, sparking fears of a larger market meltdown reminiscent of the Terra, Celsius, and Three Arrows Capital, 3AC, collapses in 2022. Bitcoin crashes under $85,000. Is the worst yet to come? On February 26th, the Crypto Fear and Greed Index slipped into the dreaded extreme fear zone, registering a score of just 10. This level of market anxiety has not been seen since June 2022, when the catastrophic downfall of major crypto firms, including 3AC and Celsius, sent shockwaves through the industry. Back then, the implosion of Terra's stablecoin, USDC, led to $60 billion in losses, triggering a domino effect of bankruptcies. While no major crypto firms have collapsed ahead of this latest plunge, investors are growing increasingly nervous due to worsening macroeconomic conditions. The market downturn coincided with former U.S. President Donald Trump's announcement of new 25% tariffs on imports from Canada, Mexico, and the European Union. The geopolitical uncertainty has driven traditional investors towards safe haven assets, leaving Bitcoin vulnerable to further declines. Echoes of 2022, a repeat of crypto's worst year? Bitcoin has now lost 17.3% of its value in the past month, trading at $84,408 according to CoinMarketCap. The current market sentiment bears an unsettling resemblance to June 19, 2022, when the index hit an all-time low of 6 as Bitcoin plunged to $19,000, suffering a staggering 37% loss in just 30 days. At the time, panic selling erupted after the Terra USDC stablecoin lost its peg to the US dollar, erasing billions from the crypto market. The ripple effect was catastrophic. 3AC faced insolvency just weeks later, Celsius froze withdrawals, and both firms ultimately declared bankruptcy. Today's sentiment suggests investors fear another devastating collapse. Traders brace for more downside as confidence evaporates. Adding to the market turmoil, Bitcoin has seen massive liquidations in recent days, with over $1 billion in leveraged long positions wiped out. Institutional investors, once seen as a stabilizing force, have instead been offloading their holdings. On February 24th alone, spot Bitcoin ETFs experienced net outflows exceeding $1.1 billion, signaling a loss of faith in crypto's ability to withstand broader economic pressures. Ben Simpson, founder of Collective Shift, pointed out that the index's extreme fear level historically presents a buying opportunity, stating, "The simple strategy over the past few years has been to buy during extreme fear and sell during greed. If you've done that, you've outperformed most traders. However, this time may be different." SWYFTX lead analyst Pav Hundal warned that the market is experiencing a confidence crisis. "It's an unforgiving environment right now. The next few weeks could be rocky, but global liquidity levels have been rising, which historically is a leading indicator for Bitcoin. March will be a crucial month. Can Bitcoin survive another market meltdown, or is a new low coming?" FBI urges crypto exchanges to block transactions as Bybit hackers move stolen $1.4 billion. The United States Federal Bureau of Investigation, FBI, has issued an urgent warning to crypto exchanges, node operators, and blockchain service providers, urging them to block transactions linked to the massive $1.4 billion Bybit hack. This development comes as new evidence confirms that North Korea-backed hackers are aggressively laundering stolen funds. FBI confirms North Korean involvement in Bybit hack. In a recent public service announcement on February 26th, the FBI officially attributed the Bybit exploit to TraderTrader, a notorious cyber criminal group also known as the Lazarus Group, APT-38, Blue Noroth, and Stardust Column. These state-sponsored hackers, operating under the directives of the North Korean regime, have been linked to multiple high-profile crypto heists over the years. The agency disclosed that TraderTrader has already begun converting portions of the stolen assets into Bitcoin and other cryptocurrencies, spreading them across thousands of blockchain addresses to obscure their tracks. TraderTrader actors are proceeding rapidly and have converted some of the stolen assets to Bitcoin and other virtual assets dispersed across thousands of addresses on multiple blockchains, the FBI's announcement warned. It is expected these assets will be further laundered and eventually converted to fiat currency. FBI demands action from crypto industry. The FBI has called upon all major blockchain participants, including remote procedure call (RPC), node operators, centralized and decentralized exchanges, cross-chain bridge providers, blockchain analytics firms, and DeFi platforms to immediately block any transactions linked to the identified hacker addresses. Failing to take immediate action, the FBI warns, could enable the bad actors to further liquidate their illicit gains, exacerbating financial losses for affected users and undermining trust in the crypto industry. Over 135,000 ETH laundered, $825 million remains unmoved. Blockchain analytics from EmberCN reveal that since the hack was discovered on February 21st, the Bybit hackers have already laundered more than 135,000 ETH, approximately $319 million. This suggests an aggressive effort to obscure the fund's origins and cash out through various crypto avenues. However, a staggering 363,900 ETH, worth over $825 million, remains untouched in the hackers' wallets, raising fears that they are waiting for the right moment to make a major move. Chainalysis and Elliptic uncover laundering methods. Leading blockchain forensics firms Chainalysis and Elliptic have been closely tracking the stolen funds, confirming that the hackers have utilized a variety of obfuscation tactics, including swapping ETH for BTC, DI, and other assets via decentralized exchanges, moving funds through cross-chain bridges to bypass blockchain tracking tools, utilizing instant swap services that lack Know Your Customer (KYC) protocols. Elliptic has flagged over 11,000 wallet addresses linked to the Bybit exploit, while the FBI has specifically listed 51 Ethereum addresses associated with the laundering operations. Crypto community on high alert. Industry experts warn that North Korean hackers have developed highly sophisticated methods for laundering illicit crypto proceeds, often converting them into hard-to-trace assets before cashing out through foreign-controlled entities. This is one of the most aggressive laundering operations we've seen, said a senior blockchain investigator at Chainalysis. The hackers are moving funds at an unprecedented pace, which means exchanges need to act swiftly to prevent further financial damage. Meanwhile, the FBI has encouraged any individuals or entities with knowledge of the hackers' operations to come forward via the Internet Crime Complaint Center, IC3, or contact their nearest law enforcement agency. Will crypto exchanges heed the FBI's call before more funds disappear?